Hello everybody. Welcome back to the channel where we talk about stuff. Don't forget to follow me on Twitter and on Facebook. There are links in the description below. We have a smidge, little tiny smidge of a silver lining, as we have been discussing over the last couple of days. I don't know if you've noticed, but the economies around the world are not doing too well, and the cryptocurrency market is also reacting to all of this as well. People keep forgetting in a stunning display of interestingness that the cryptocurrency market also deals with money and finance. So if the stock market and economies around the world are not doing well, the cryptocurrency market probably is not going to do well as well. A number of banks over the weekend have renewed their forecast, wouldn't you believe it, as to what they believe the Fed is going to do. The idea, as we've gone over the last couple of days, is that the Fed needs to do something. It's no longer, it was never really a joke, but now it's more of a no, like this actually has to happen, or we are going to have complete and utter economic collapse over the course of the next couple of months, period. Like there's nothing really after that. JPMorgan Chase has reportedly dramatically changed their forecast for where they think the economy is going and their entire idea for incoming rate cuts. The idea has been since the end of last year that the Fed was going to cut interest rates. As of now, right now, we still have not seen that. And the problem is, amongst many different problems, is that they are trying to lower inflation, which is not actually lowering, as things in stores and around everywhere continue to rise in price. So over the course of the last 2 years, the Fed has tried to raise interest rates and keep them steady in an effort to kind of cool down all markets. I know it sounds ridiculous, but that's the general idea behind it. If you raise interest rates enough, you disincentivize people, I'm sure that's a word, from taking out debt and kind of like cooling off the market until we are all cooled down together. And then you lower interest rates and you slowly allow the market to go back up. The market's not going to slowly go back up. It's something that everyone has been waiting for the better half, if not more, of around 2 years. JPMorgan says that right now the world is fearful that there is going to be a global recession that is going to grip markets and not let go. A little dramatic in their wording, but okay. They base this off of they say the weaker than expected job reports on the US economy, bleak job reports, as well as the stock market crash that was triggered. They're terrified that this could cause more cascades over the course of this week and therefore, of course, all the following weeks as well. If you wake up and you're terrified and scared and you don't hear any good news, people get scared, they begin to sell. They continue to sell more and more. The idea was from the Fed that, not funny, that we would have a soft landing. I'm sure many of you heard this on the news before. That as they raised interest rates, the market would begin to cool everywhere across the board at the exact same time. And then at some point, we would have a soft landing, and some people would lose their jobs, but it's totally okay. Also, don't forget that the head of the Fed sometime, was it earlier this year, literally said on TV, I don't care, and I'm paraphrasing here, I don't care if people lose their jobs, the most important thing is the economy. Forgetting that people need jobs to boost up the economy. So what economy exactly are you talking about? The idea was a soft landing, that basically we collectively would have hard times, but it wouldn't be that difficult, because he also said, remember, like 2 months ago, the head of the Fed said he did not understand why people were so angry or so sad or annoyed with the economy right now. He said things are looking great, inflation's coming down, and you forget that like 50 million people are constantly fired, like collectively around the world every single month. Here's the silver lining. The idea was, as we've been going over since the end of last year, that the Fed at some point was going to cut interest rates. Everyone still with me? Good. The idea was we'd see 4 interest rate cuts over the course of this year. thus being 0.25%, 0.25%, 0.25%, 0.25%. We get to the end of 2024, 2020, still 2024, geez Louise. And we go, okay, cool. Things have gotten a lot better. JPMorgan has said, no, you gotta do this right now. And they're calling for 2 more rate cuts before the end of this year, 2, and both of them being either half a point or an entire, they say, 100 basis points over the course of a 2-month time span. Literally meaning, as I've been saying before and the other analysts have been going over, you got to do something right now because the markets don't have until the 1st of November for the Fed to finally react. One of the heads of JPMorgan Chase said, and I do quote, had the Fed had this jobs report in hand before going into the last FOMC meeting this past Wednesday, it is almost certain that we would have heard them say that they are going to be cutting the interest rate by 25 basis points. Now, because of the brand new news, it looks like we are going to be materially behind the curve, and we are expecting a 50 base point cut at the September meeting, followed by another one 2 months after in November, end quote. The silver lining is, you might remember earlier this year and also last year, there were a lot of rumors. It's actually kind of odd. It's actually quite odd how the Fed works. Really, someone stands on stage and they say something. Got it. But people actually, analyze the way that the Fed says something. If they change the wording on something, it typically means that markets are going to move in a certain way. It's been this way kind of forever. Like you can literally say, I want ice cream, I want ice cream, I want ice cream. I want chocolate ice cream with some sprinkles on top, and the market will literally react. I'm not joking. The market will react to what they say. We've had situations this year and yet last year, sorry for screaming into the microphone, where basically people have been looking to see if Jerome Powell was going to say anything different. We had 2 instances where people believed earlier this year we were already going to have rate cuts because he says it doesn't seem to be necessary right now. However, we will look into it in the future. And that sentence would never actually have been said. So, on the expectation of a 0.25% drop in the interest rates, we've seen the expectation that he was going to say something. You've seen markets go up. If they actually announce that they're going to be cutting interest rates, the markets collectively will recover, and then they'll also even go even higher when the rate cut actually takes place. If we kind of squeeze all together those 4 interest rate cuts that we assumed were going to happen this year into 2 interest rate cuts and or 1, we would see a massive swing back up in the market. And then I say this lightly, hopefully, by the end of next spring, going into next summer of next year, we should kind of be good. The market's very unstable. All markets are unstable right now, and we need like a literal glimmer of hope. If these people do not lower interest rates, can't say that word on video, but we're going to have problems. If they announce that they're lowering interest rates and other countries follow suit as well, we will see markets pump. And you'll know that things have gotten better when you begin to hear that these mega companies or any company in general is hiring once again. But we need interest rates to lower and money to flow back into the market because that's just the way that the market is formed. I assume over the course of this week, it has to happen. We are either going to hear from other banks and other institutions who are changing their viewpoint, saying we need these cuts now, and or if the market reacts negatively Monday, Tuesday, and Wednesday, we need the Fed to literally go on stage and say, hey, we got it. Like, we're going to lower it during the next meeting. That's kind of all we got right now. It sounds like a joke, but that's literally all we got right now because the economy is so messed up. I don't know if you've seen it before. People are posting memes again online of like the money printer turning back on. That's the only thing that's going to essentially save the economy is to print more money, lower interest rates. And we saw what happened in 2008, 2009. Right. Thought I'd give a little glimmer of hope in an otherwise dark and full of despair news world. I don't know how else to frame that. I do hope you are all doing okay. I hope you're all having or have a great day, morning, afternoon, evening, wherever you are, wherever the heck you might be. I do hope it's absolutely fantastic. We are living through some very interesting times, because this is a little crazy. This is actually, the last 4 years have been kind of a lot. Yeah. Thank you all once again for watching, listening, liking, commenting, and supporting. And I will most certainly be talking to you all soon. See you.